Guys, welcome to Silicon Valley Girl. I am pretty sure that many of you guys who are watching this video, you really want to make some passive income out of your investments, like being able to sell some of your stocks that you bought for $100 and now they trade for $150. Or maybe you want to have consistent income from your dividends. And I'm also pretty sure that a lot of you guys who don't have a lot of money saved still want that money to go to work because they lose their value every single day because of inflation, because of other factors. And when you start investing, even with smaller amounts, you are working on your investment culture, you're working on your investment strategy, and you're learning a lot about investing. The problem is there is so much information around us about investing. And when I started investing a year ago, I was like, oh my God, there are so many influencers who seem to be doing great. There are so many courses that you need to take. There are so many apps that you can use to invest. And so I decided that 2020 will be the year when I start investing and when I learn everything. So I took over 6 courses. I invested hundreds of thousands of dollars. The goal is to invest $2.5 million by the end of 2025, because if we assume a 7% growth rate, that's $175,000 of passive income a year, which is kind of great. And I don't want to rely on that income as my primary source, because I think investing, if you're not a professional investor, it should be something that helps you grow your assets, but not something that generates primary income for you. So I still want to be able to focus on my superpowers, hopefully creating content, building companies, doing things. And investing will be something that would help me preserve my assets. So I've been investing for over a year. I've made some horrible mistakes, losing over 30% of my money. I made some good investments, and I'm going to talk about things that I've learned over a year. I'm going to talk about things that worked and didn't work. So if you're interested, please continue watching this video. But before I watch this video, please hit the like button for all of the efforts. And if you're not yet subscribed to this channel, on this channel I talk about my life in Silicon Valley, building products and investing. So hit the subscribe button down below. And one more thing, I'm pretty sure people in comments below will be saying, don't invest in stocks, invest in crypto with me. I can guarantee you 70% returns. And sometimes they would even use my name and tell you to transfer the money using WhatsApp or whatever. Please make sure you are informed about scammers. And there is no such investment that will guarantee you 100% 2x returns, etc. With investing, it's really important that you have to study it first. There is no magic pill where you say, I want to invest in this asset and it will generate lifetime income for you. No, you really need to study, and I really encourage you to either take a course, read a book, watch videos here on YouTube, but you need to know what an ETF is. You need to know what an index fund is. You need to know how S&P has been growing over years. It's just something that you should take care of yourself, because if you try to delegate, I'm just not sure that delegating your investment is the best way to do it. And again, this is why I spent over a year investing. And I just hope that information in this video will help you pave your way into the investment world. Before we go into my mistakes, I really want you to look at some of my portfolios. Portfolio number 1, I use Vanguard for it. And this is a portfolio that has been performing pretty well. It has made over 35% in the past year. The strategy there is like one of the best strategies. I just selected several index funds like VIGAX, VTIAX, VTSAX, and I buy into them every single week. It's not actually me buying, I automated everything. And this is the best, because sometimes, the market is down. You're like, oh my God, I need to wait for a couple more months. Maybe it's going to be lower. Or the market is up and you're like, I don't want to buy the peak. But the problem with that approach is you always lose. Well, there are some stats that show that you can't time the market, and the best strategy is to invest regularly. So I automated everything in a way that investment is made automatically. If you live in a country where you don't have access to an app that allows you to automate things, I would highly encourage you to have a date in the calendar. Maybe it's every second Thursday of a month, or maybe it's every Wednesday, when you just sit down and you don't look at anything that's happening in the market. You just buy into funds that you like, that you selected as a strategy. Because again, this is number 1 portfolio. This one has shown 35% returns, but I have some negative returns on my other portfolios. And what I do, I use different broker apps for different strategies, just because it makes it more visual in terms of like how these strategies are performing. So this is the best strategy. I've selected those funds. I buy into them automatically. Second strategy, I use Webull for that. Webull is one of my favorite apps, by the way, and if you want to use it, please use one of my affiliate links down below to get free stocks if you decide to invest with Webull. With Webull, my strategies, I buy into companies, I buy into stocks that I like, and stocks of companies that I believe in. And I made good investment in Google, I made good investment in AMC and United, just because I thought they were undervalued because of the pandemic. But there are also companies that I really like Amazon. Like I never would have thought I would lose money on Amazon. However, I lost money on buying Amazon and Salesforce, and I could have avoided losing money if I followed one of the strategies that I'm going to talk about a little later in this video. The next broker app that I use is Robinhood, and I use that app for emotional purchases, like buying Coinbase stock on the day it IPO'd. And you know what's the return on that portfolio? Minus 12%. Again, just a proof of theory that you need to be consistent. And if you're not a professional investor, better focus on what you do best, like your professional career, making videos on YouTube, etc., but not timing and guessing the market. I'm not one of those people who would start their day by looking at the charts. I'm not one of those people who would watch every single video and every single analyst talking about what's going to happen to the stock. So it is better for me to really avoid those strategies. The same with crypto. Oh my God. I started investing in crypto in 2017. I sold most of my crypto at the end of 2017, but then I bought most of my crypto a couple months ago when it was peaking, and I was like, oh my God, I need to buy into crypto. But I'm super happy that I told myself that crypto is not going to be more than 3% of my portfolio. So it wasn't too much that I invested into crypto, but still. So some of my top mistakes. Now, first of all, when I bought into stocks, I made decisions in a day and I invested everything in a day, like with Coinbase stock. I was so excited for all of the early investors that I personally know. And I thought, Coinbase is the future, etc. And I still think it's the future. It's just I lost over 30% of my money by buying their stock on the first day, on the day of their IPO. I think it was April 14th, because their stock lost over 30% since then. And what I should have done, and what I think people should do, and again, I'm not a professional investor, and this is not professional advice, but if you think that, okay, I want to own $5,000 worth of Coinbase stock, I should have bought $1,000 worth on day one, then in 10 days, invest $1,000 more, then in 10 more days, invest $1,000 more. So step by step buying, not pouring everything into one asset in a day. This is the worst thing you can do in terms of diversifying your investments. Then another mistake is trying to actively manage my portfolio instead of just following the strategy of investing into low risk assets. Again, I'm not a professional investor. If I were a professional investor and could invest most of my time into really exploring the market, but I'm not the person who would look at the charts in the beginning of the day and attend Meet Kevin's live streams where they discuss market closures. I'm not that person. I don't have that much time. I can dedicate maybe 30 minutes a week into my investment strategy just to analyze how everything is performing and maybe buy something additionally apart from just automating it. So trying to actively manage when you're not a professional person, I don't think it's a good idea. It's a good idea when you start. And I don't look at these mistakes as something that's really bad. I look at them as a learning process, and I'm glad I made them because now I have a clearer strategy, and I'm going to talk about it at the end of this video. But again, really important to remember, you need to focus on your superpower, which is probably, if you're watching this video from a non-professional investor, is not investing. So if you're like me, if you're someone who makes money by doing other things, just make sure, you spend some months, maybe a year studying, trying, but then you just stick to a strategy that doesn't require too much of your time. Listening to other people's advice. Oh my God. There are several topics when people like to comment. Healthcare, if you have a problem with your health, people be like, oh, try this, this help. And investing. It seems like everyone is such a professional investor. And I say oh, I wanted to invest in Airbnb. No. This is the worst investment you can make. Or I want to invest in this. No. Or do this. Everyone is such a professional, but somehow nicknames of people who comment are not Warren Buffett or whatever. So listening to other people's advice about what to buy and not to buy is the worst, because then you rely on them. And they say monkeys are better at picking stocks. So I wouldn't really listen to people in comments or some random people just telling you what to buy and what not to buy. The next mistake is too many small actions. Like, why did I buy one Coca-Cola stock, which cost $5 and now it's like, what, $5.20? What did I learn from that? That I can buy a stock? So I still watch Meet Kevin, not regularly, but I like his approach when he says, if you're buying into stock, invest the amount of money that will make some difference for your portfolio. Because if you're investing $5, then it's like, what can you make out of it? Like, you lose $5, you make $5, you don't care. So if you really believe in the stock, then invest something that still like less maybe than 5% of your portfolio. I'm still like following a rule that every asset should be less, every stock should be less than 5% of your portfolio. But investing like $5 or $20 into a stock, come on, maybe again at the beginning if you're testing how the app works. In general, it's just not worth your time. Meme stocks, oh my god, I made $400 trading GameStop, and I spent today actively looking at what's happening. Was it worth my time? I make more making videos here on YouTube. I make more with my companies. So again, it's great that there are things going on, but you don't have to follow news. You don't have to watch every single live stream. It's just too much information out there. Just protect yourself from that. Now going into rules that I'm going to apply. So basically what happens, and I've already talked about that, I invest 50% of what I make every single month, and I try to follow that rule. Most of that will go into automated investing through Vanguard, and I have a video where I share all of the index funds that I'm investing in. And the second rule, I will still have some assets that I can't automate, like buying into stocks, buying into crypto. And in terms of crypto, I'm buying Bitcoin and Ethereum, but I'm introducing more discipline there. I'm gonna buy every month at a certain day when I analyze all of my financials. And this is like another rule that I'm used. I always analyze what's happening in terms of like income, expenses, unnecessary subscriptions, etc. It's really important for me to keep track of my money. And the day when I analyze how much I made is the day when I'm gonna make some purchases in terms of investment. And I won't be looking into the market. I won't be timing my investment. I'm just gonna invest. That was it from me today. Thank you guys so much for watching this video. I just hope you really learned something about investing, and I hope you're gonna learn from my mistakes and you're not gonna make them. Please let me know in comments below how far along are you in your investment journey. Like, have you started investing, or do you already have a strategy, or you're just thinking about investing? Please let me know, because it will really help me with the future topics for my videos. Thank you so much, and I will see you very soon in my next videos. Bye bye.